I mean, especially when I got the motherfucking. I appreciate that, Alfred. What's up, man? Hey, what's up, Investor Z? What's up, everybody? Hold on. I looked at the charts and I was like, damn, looks like I missed another good day. But guess what? Guess what? The market has definitely given me a clue. We should see somewhat of a recovery because the market has made three legs down. We have the first leg down, the second leg down, and on Friday was the third leg down. We usually do not see more than three legs down. We usually do not see that. Usually don't, unless something crazy has happened. And even then, I still don't see three legs down. So after we got our three legs down, look at the market still using the trend line, still using that chart geometry from which session was this? September 23rd's trend line, or where was this trend line at? September 24th. Using the trend line from September 24th. The market's still using the trend line. And now we're seeing the move back up. So I wouldn't be bearish anymore. I would actually look for longs moving forward until the bears reestablish control of this market. And yeah, we might see like a big recovery. Yeah. Yeah. And if you look at the higher time frame, actually, you look at our data. I meant to take this data. I meant to actually fill in this data. I'm gonna still have to do it. Probably to come back probably next week and do it or something like that. Mm. But yeah, just like Alfred said, last Friday. Oh, this was a bearish trend. What the hell? Or this is yeah, okay. This was a bullish trend. Make sure that my colors are actually right. Yeah, sure. Let's look at that. Actually, if this information is true, if this information is true, it seems like a lot of countries is now pointing their aggression and protecting Palestine, and it looks like a lot of nations are saying that if Israel does something, then they'll all attack Israel at once, which could spell obviously a global war, obviously, uh, but hopefully it doesn't get to that point. I love how everything is loading. I love it while on stream. I love it. Load it up. Load it up. Load it up. Actually, my bad, guys. I wonder. You know what? I wonder. Let me look at this. Let me look at this. Let me look and see if Israel has like news or something like that. So tomorrow Israel have his interest rate decision. 8 o'clock. That's interesting. Hey, what's up, Cape Trader? Okay. So I think I'm just making this thing more complicated than it needs to be. Oh, that trade on gold. Yeah, I missed it, man. I just have a hard time getting in front of the charts on Sunday open. And I always hate, man, this was a really good long on gold. This was a really great long. We have, like, this is actually textbook. And this is why gold is my Goldilocks instrument. This is a textbook move right here. You have a big move higher that breaks previous structure, and you have literally a two-legged pullback into support for that long. So I just actually turned on my Ninja Trader, and when I saw that I missed this textbook two-legged pullback into support, I was trying my hardest, or let me rephrase that. I'm trying not to be too angry about this, because I mean, I wasn't in front of my desk. I usually don't get in front of my desk until I start to stream on Sunday. So I really don't want to get into the habit of getting into the market as soon as it opens and getting into the market as Sunday open. I feel that by following that rule, I can avoid some losses, unnecessary losses. But then, like I said, it is always painful to see the market always, and this is painful, I'm not gonna lie. And that's painful. So you're in gold right now, man. Congratulations. You said it went long and then you closed and then it rejected. Shit, I'm glad you got some money out of that. Damn, look at this move on gold, man. Gold is making all-time highs, man. But like I said, Israel is getting some heat. And who knows? Who knows what will happen? Oh yeah. I mean, like I said, I wouldn't chase this because it's going to pull back. Gold is going to pull back, so I wouldn't chase it. But then at the same time, it depends on how many ticks, points, whatever you're looking for. Y'all guys know that I look for 90 ticks on gold. So when I see a move like this, I already know that it's highly unlikely that I'm going to see a 90 tick continuation after it breaks a high. I just wait for the pullback because I know the pullback's coming. I know the pullback's going to come. We got a break of structure. We'll probably see a pullback to about around maybe 805. Somewhere probably in this little range right here. probably somewhere right there, probably somewhere at this value area high at 806. So these are two areas of interest that I'm looking at with gold if we see the pullback. But I'm not taking a trade until I see a pullback. So this thing can go to infinity, and I'll still wait until that pullback. So I see that the orb on Friday, I see that if you took the orb on Friday, it was highly likely that you got stopped out for a loss on Friday. Highly likely. You may or may not, but it looks like the Nasdaq was playing games all day on Friday. Oh wow. Isn't that interesting? That is interesting. Yeah, dude. I'm looking at the Nasdaq right now. I'm looking at Friday's price action on my higher time frame chart, and dude, I'm like, man, I don't know. I probably would have gotten it, but I don't know, man. I don't know. And you know what? Honestly, I thought about so the trading strategy, and like I don't know. I'm not gonna do that. I'm not gonna scalp. Maybe I will, but I'm not gonna scalp. I'm not gonna move forward with that strategy. Maybe if I move forward with that strategy, it wouldn't be 27 contracts. It would well. No, I'll look at that in a second, Cave Trader. So Luke said he went long on ES. I will say that that's definitely an aggressive long on ES. That is definitely an aggressive long. Where are you targeting? 714? Okay, yeah. I mean, yeah, you can probably get that. Yeah, that's only about 3 ticks. You know, I watched this older guy with ES, and one of his strategies is that he takes like a 1-point scalp on ES, and then he trails as it goes higher. With me, I'm thinking that do ES traders really look for 1-point scalps on ES with size? And I guess Luke, I guess you answered that question. And I guess you was right, Alfred. As soon as you bought into it, if he would have bought the top here, here comes that pullback. K Trader says that he sent something on Discord. Oh shit. Damn, dude. Okay. Oh, so you went long at this high. Hold on, what? Hold on, so you went long at this high and then it stops you out. Damn, it stops you out to the tick. And then it goes without you, bro. Dang. Dude, how are you not mad about that? That's crazy. I would have been pissed. I would have been pissed. Yeah. And I definitely agree, Luke. I do believe that we will see a move higher because we had three legs down on the Nasdaq. The market it's I don't want to say never. I don't want to use absolute when it comes to the market because we all saw what happened with COVID. But if you don't see nothing bad come out, we usually do not see more than a three-leg move down. Three legs is usually that magic number. And then we actually talked about that on Thursday. We talked about that I'm waiting to see if the market is actually going to do a three legs down. And if once I saw the three legs down, then I know that the longs were going to step into the market because we usually don't see more than three legs. So I think we could see the market continue to trade up. 915 maybe 915 because we had that great call out at 700. The market got to like 695, 700, and then we saw that dump, and then the market comes up, pushes down, it takes the liquidity underneath that low, and then it takes the liquidity underneath that high. So I do expect a pullback, and then the market continue up. So where can the market go? Where can the market go? I mean, we do have this trend line up on top, so I know that eventually this trend line is going to play as resistance eventually. We have all-time highs at 25.27, it looks like. We got this high at 900. We got last week's close at 861. 861. Well, I mean, I do see potentially, I do see a bunch of potential areas where the market can dump at. We could see the market reject at around 815 to 835 right here at this range, 815, 835. So this can be a hot spot for the bears. We also have 860. But I usually like to round it up to 875. So 875 to about 895 is another area right there where the bears can come in at. That's another spot that the bears can come in at. And if we can kind of get above these two areas of potential resistance, then I really don't see a reason why we can't get a retest of all-time highs, potentially making new all-time highs. I do see another range right here. So 935 to about 955 is probably kind of, I think that this will probably be the final boss for the bulls right here. This will be the final boss right here. So we got three areas of supply. So we'll see if the bears will be able to hold this. I'm not looking for a reversal. It will most likely be rejections from this area. It really depends on, we might see a deep pullback from this one. We'll see which one that they reject from out of these two. But I don't think we see a reversal from this area. The market has to at least come back up, and then we'll probably see this, and then potentially a move higher or a move lower. We'll see. You said a labor report? Yeah, let's actually look at that. Okay. Fed Museum speech. Sure. Yep, we got non-farm payroll this Friday. ISM services, so yeah. We definitely have this is a labor week filled with the labor data. Obviously, we always have continuous jobless claims on Thursday. ISM manufacturing, we have that on Wednesday. ADP employment change, so that's going to be definitely something to look out for. Do we have JOLTS? Yep. JOLTS on Tuesday. That's always, it's 9 times out of 10 we know that JOLTS is a bearish event. The market tends to sell off on JOLTS day, then we see green 9 times out of 10. It doesn't mean that we will guarantee to see a red day, but we usually see red on JOLTS day, usually. We have some housing news. So I've made some comments in the past about the housing market and how I choose not to participate in that market. But over the weekend, I've kind of done some research into this because just because I feel a certain way about it doesn't mean that obviously people will share these views. I don't enjoy the fact that if I own a property, the government still finds a way to get their cut. If I'm not paying a mortgage or whatever, I'm paying property tax, insurance, and all that other stuff. And I just feel that owning a home is death by 1,000 paper cuts. I mean, that's just my personal opinion. And that's why I choose not to own a home. But as I was doing my research, and I kind of knew this, but I didn't understand why. If I plan on, so this is what I've learned. So apparently what a lot of people do is they use real estate to save money on taxes, to get tax incentives. And apparently the current tax system incentivizes those that employ other people and own real estate. And that's why you'll see rich people own properties that they themselves don't necessarily manage just for the tax benefit. And seeing home ownership through that lens, it kind of got me into, I guess I went, while I was on vacation, I was still at work. I went into a deep dive into real estate, properties, builders, all kind of stuff. And I just kind of went down this deep rabbit hole in which totally changed my perspective of the housing market. And even though I don't ever plan to become a homeowner, I have no problem offsetting and lowering taxes by owning properties and potentially renting them out. And I don't know about you guys, but once I went down this rabbit hole, it just seemed like this whole brand new world opened itself up to me. I never thought about like an apartment complex, hotels, any property that a human being can live in is real estate, is a rental property. I never looked at it. My mind never understood it to be that way. I just always thought an apartment building was an apartment building. It never crossed my mind that someone has bought an entire building and that's their property. It's a part of their portfolio. And every month, this apartment or an apartment is bringing in monthly revenue from the rent. I for whatever reason, it just never crossed my mind. Hotels as well. A hotel is basically a property. Just because it has a brand name on it, like as an example, 7-Eleven or Hilton or whatever. If someone owns that property, it doesn't matter what name is on the hotel. I own that property, and as a hotel owner, or as a person that owns a property that operates as a hotel, and you have to say it that way, that operates as a certain thing, a home that operates as a rental property, I know what kind of revenue that I'll be bringing in every month. And the great thing about owning like a property that operates as a hotel is that you know that as long as there's reservations being made, you'll always have, you can kind of count your chickens before they hatch. Because I mean, I guess people can always cancel, but usually if someone, especially if you make people put down a check-in deposit, that would definitely cut down on cancellations. But as long as people are always reserving rooms to stay in, you know, it's kind of guaranteed profit. So yeah. And I actually learned that, and I was like, "Huh, that's a very interesting concept," because I actually did come across that, Alfred. I'm glad you brought that up. McDonald's is not. It's a real estate company that also sells burgers. They're not making the money off of. Well, they are, but they're strategically have properties in strategic locations, and it's the real estate of McDonald's, not them selling their hamburgers. Selling hamburgers is just another source of revenue, but it's a property that operates as a restaurant, and that property that operates as a restaurant brings in customers that buys their products, etc., etc. That's why they have so many properties. Damn, these sinuses. I hate sinus season. It seems like it skips. So I didn't deal with it last year. And it usually is like every other year that my sinuses just gets me during sinus season. I don't know why. When I first came to Texas, I guess because of, I don't want to say the air quality is dirty here, but it definitely can be. Car wash services are definitely profitable businesses here for a reason. But when I first got here, I thought I was gonna die. I thought I was losing my life. I was like, God dang, is this how I go? And then, you know, I go to the hospital. I don't go to the hospital that much, but it was just that severe that every time at nighttime, I felt like, oh man, this is it. And I go to the physician, and he says, "Oh yeah, you just got sinuses. You got to take this medication." And I was like, "Dude, I was going to get taken out by sinuses. That's it." My temperature would go up to 103 and stuff. So, dude, it was bad. It's just like every other year it happens. So I guess this is my sinus year. I guess. I haven't had a high temperature. It's just that my nose is just stuffy. So I apologize. But going back to what I was saying before, yeah, man, real estate runs this world. And it's not even just the real estate; it's actually the land that the real estate is on. What a lot of people now, actually, I had this one of my colleagues that I would consider a really good friend. He said that he took out a VA loan, and I don't know if because I believe that Microsoft and Google, and I think they are down here in Texas, in Austin, I think. I'm not sure. But he took out a VA loan and he bought land or around the area where he believed that, you know, Microsoft and Google or one of these tech companies were going to go and start building on. And because he owns the land, if they wanted to build their properties on this land, they would have to pay him, a rental fee to house their property on his land, and that's how he wanted to recoup his investment. Now, I haven't spoken with him, and I don't know if this investment actually paid off, because I really didn't look into it. He just told me about his investment. I was like, that's pretty cool. That's a great idea if they choose to build on the land that you just bought or purchased. But it's a whole world out there with real estate and land and all this other stuff, and obviously the government wants their part, so they tax it. And what I've also learned is that if you're poor, and what I mean by poor, if you don't have the money to purchase your home outright, then in my opinion, and this is again my opinion, it's better to not even go through the process of even owning a home, because there's so much that goes into it. One bad day can wipe you out. One bad day can wipe you out. Tens of thousands of dollars can be gone on one bad day on a property if you can't afford it. If you're paying about $2 to $3 to $5K in mortgage, but I don't think anybody has like a $5K mortgage to let you have $1 million, $2 million home. I guess like the average American, their mortgage is probably maybe upwards towards the $3K, $2,500 to $3K. You're paying for insurance, and you're not even touching the amenities like your electricity, internet, and then obviously you got to pay your taxes on your property. God forbid if you own a property in an HOA. I mean, shit, those HOA fees can be definitely expensive as well. And God forbid you're in one of those HOAs where they try to fine you for everything. Oh, you didn't cut your grass to your grass isn't an inch and a half. We're gonna fine you $500 a day for every day is not an inch and a half. Like, stupid shit like that. Oh, you have an orange fence and you're not supposed to? We're gonna fine you $1,000 a day for every day that is orange. Stuff like that. And like I said, it takes one bad day. Septic tanks, and it's usually the stuff like with plumbing especially, can definitely ruin your day. And you can be out of a home if something bursts, something breaks, and you don't necessarily have the money to afford to fix it. So this rabbit hole definitely kind of giving me a lot of game. And I will say that maybe in the future, owning a home or owning a property to rent it out or to have somebody else manage it would be something that I'll begin to consider. But I will definitely not own a home, or I won't take out a 30-year loan to have a home. It's not that serious to me. I need to be able to pay for the whole damn thing. Yeah, YM, dude. Gold is yeah. I trade Nasdaq because this is Nasdaq Anonymous, and I'm addicted to her moves. I'm addicted to the way that she moves. But like I said, gold is definitely my Goldilocks instrument. I've made so much money on gold. Honestly, it got to the point to where I was like, shit, what's the point of even trading the Nasdaq? But I mean, shit. The Nasdaq is definitely a siren. She definitely called me back. I remember saying that I would never go back to the Nasdaq, and here I am, back on the Nasdaq. But I am adamant about all my funded accounts will only be traded with gold. I mean, I can't justify trading the Nasdaq over gold when gold makes. I can literally come in day or night, wait for my setup, and it works regardless of what time of day it is. With the Nasdaq, you kind of have to, if you take a trade overnight, you have to consider, or you have to take the risk that you'll probably be in the position until at least 7:30 in the morning Central Time, at least. Yeah. Okay. Yeah, that shit is crazy, man. I definitely agree. Well, actually, yeah, like the HOA is like someone took a Karen and said, "Yeah, let's turn this into a business." Like it's literally people minding other people's businesses. And you know, with all things, it starts off as a way to protect other people, because from how I understand how HOAs were started was so other people's properties can be protected, because once you're in a neighborhood and you're trying to sell your home and your neighbor hit their house looks crazy, like a loony person lives next door, you know, that's going to scare away potential buyers if you're trying to sell. So, you know, to protect from that, you know, the HOA was supposed to have the neighborhood uniform, so that when a new buyer comes into the neighborhood, it's like, okay, yeah, there's nothing crazy here. I'm interested in purchasing this home, and this is where, you know, I want to start my family if this is, you know, what they want to do. Just imagine, I don't know, somebody with rainbow fences, sprinklers all over the place, a statue of like a goat or a dolphin or whatever the heck in the yard. It just imagine like the most craziest thing that you can imagine, and that's your next door neighbor, and you're trying to sell your property, and your next door neighbor is fucking up the bag. I can understand that, but obviously, when it comes to money, you know, that's where the focus is, and people just want to charge you just to make the money, especially if they have a quota that they want to meet. Because let's just say that the HOA's quota is that they need to take in at least, I don't know, $1 million per year. They're gonna find ways to find you. They need to make that million, especially if it's their quota. So you said that the Nasdaq is getting. I mean, I definitely agree. I definitely agree. The Nasdaq is definitely. I agree. The Nasdaq is definitely one of those crazy girls, that crazy ex that you just kind of. All right. So 177, and I think I said 192. So 177 will be the leader. 177 and 192. I think what I'm gonna do. I think what I'm gonna do, because I'm not gonna scalp. I'm not scalping the Nasdaq. I'm definitely not gonna scalp it. Yeah. Even though so on Thursday or whatever day that was, where we was scalping the Nasdaq, we had a 18-point reward, and we only had a 3 ticks. 13 ticks was basically 2 points, I think. We got 13 ticks of risk, so that's what, 8, so that's like 3, that's 3 points, 3 points of risk. We gained 3,000, we gained 2,800, we lost it, and we got it back. And so basically, even though I made more money than I usually make with this new trading style, it was exhausting. Like it wasn't, the first day it was exhausting. The second day it wasn't as exhausting, but I saw myself kind of getting addicted to it. And I saw myself looking not necessarily that far into the future, if that makes sense. I was kind of tunnel vision. I was only looking for the scalp. I wasn't really looking for the move. And it kind of, as I kind of self-reflected and thought about it, if I'm scalping, I'm not looking for the big move. I'm just not. And over time, it's hard to justify. It's hard to justify to not start every position as a scalp. It's hard because what my initial thought process in theory is to start every position with 4 contracts, and if the market is going in my direction, to add the 27 contracts. But once I hit the 18 points, that 18 points, I've made in that 18 points, I've made more money than the entire position. So I disengage from it. I don't need to even pay attention to it, because even if it comes back, I made $900. If it stops me out, I lose 2, so I would make $700. And I don't even have to pay attention to the position anymore. It's not the point. So I just decided that I'm just not going to scalp. I'll probably will do it. I mean, I'm not going to sit there and say that I'm going to be perfect about it, but that's not going to be a strategy that I'm going to 100% move forward with. But I do want to. What I'll probably do is reduce the size, reduce it from 27 contracts to probably 18, maybe. Yeah, probably like 18 contracts. Give myself a little bit more room. Or maybe I can just keep it the way that it is. Maybe I don't even have to touch it. It just reduced the size. Because I mean, I only lose with 27 contracts with 3 points of risk. I think I only lose like 120 or something like that. I don't know. Maybe 160 or 80 or something like that. Yeah, YM. Oh no, we trade Nasdaq. I mean, we trade Nasdaq every day. Uh, so what I found to consistently work on the Nasdaq is the same setup that I look for on gold. It just works better on gold than on the Nasdaq, but it's still the same setup. I wait for the break and retest on the Nasdaq, but instead of taking the break and retest trade on the Nasdaq, I just kind of just trade the Nasdaq 15-minute orb. That has worked consistently. The 15-minute orb on the Nasdaq and the ES, I feel is the, if you're looking for consistency on the Nasdaq and the ES, waiting for that 15-minute orb is probably your best bet. And we've been documenting what happens on the Nasdaq during that 15-minute orb since I don't know how long, but we've just been documenting it. And it has consistently broken out from either the high or the low. And the first move is at least 20 to 40 points. Roughly 30 points. Roughly 30 points. And usually once we have a certain amount of contracts being traded, we know that usually if we see the market start off with less than 100,000 contracts, then we usually see chop and slop. And the last couple of days, that's exactly what we saw before the breakout, because the market has to generate the liquidity to move. But once it starts the session off with the liquidity that it needs, then we usually see the moves happen really quick. So the orb is definitely a great way to be consistent on the Nasdaq and the ES, in my opinion, and in the data's opinion as well. I try not to trade outside of the 15-minute orb on the Nasdaq in the stream account. Now, when I'm not trading the Nasdaq, majority of the time I'm trading gold. Like I said, gold is my Goldilocks instrument. I'm in gold mostly in, and but on stream I'm mostly trading the Nasdaq. So yeah. Yeah. That's usually what happens. Okay. So let's see what happens on gold. Let's see. I do think, because I mean this move kind of happens a lot on gold. We'll see if the market takes out 27. We'll probably get to 30, and then we'll see a rejection. We'll probably see a rejection. I mean, this is classic price action on the gold. And this is why, I mean, shit. We can focus more on gold because it seems like a lot of Nasdaq traders are transitioning to gold anyway. And so in this account, this is what I plan on doing moving forward. I'll just trade the Nasdaq and gold in this. Like, it will look at both the Nasdaq. We'll look at gold. We'll take trades on both of them in this one account, and then we'll copy trade it with the other account. And we're just gonna wait for our setup on both. Oof. So YM, what is your original position size? And when you DCA, so I mean, there's a trick when you DCA. A lot of professional traders actually trade this way. When you DCA, you're not supposed to DCA like as an example. And I'm not saying that you are doing this. This is just a educational crash course on how professionals DCA. Usually people will DCA like this, like they're DCAing like that. And as the market is going down, obviously their loss is getting bigger and bigger and bigger. But what professionals do is when they DCA, they're DCAing here, they DCAing here, and then they're DCAing here, and then they probably have one more position right here, and this is where their stop is, like probably underneath a low or something. So I accidentally erased that. So they're DCAing at prior areas of support, and they have their stop underneath like a previous low. So let's just say that, price breaks through there. Okay, that's fine. Price breaks through there. Okay, that's fine. And then when they finally, this last level right here, their average entry is right there in striking distance. That's how you correctly DCA into your position, because the whole point of DCAing into your position is to get your average entry as low as possible. Which makes sense in theory and in application. And then, if they're wrong, they take their loss and, they get stopped out. But if you're trading in the direction of the trend, it's kind of hard to be wrong on a trade like this. I'm not saying that you can't be, but if you're trading with the trend, you're usually not going to experience that loss. But if you DCA like this, then, unfortunately, if it's trying to perform a deep pullback and you wasted all of your bullets up here, well, unfortunately, it's going to stop you out, or you're just going to have to experience a big drawdown. Hopefully that helps. Hey, what's up, Team Massive? What's up? You're in a short? Give me a second. But yeah, like I said, you don't want to DCA too close together. Professional traders are actually doing this. They just strategically DCA at areas of support. They're not wasting all their bullets in one area. They strategically scale in as the market goes down. And as they strategically scale in, their average entry comes down. And if they're wrong, well, the market obviously moves in waves. So let's use this as an example. Let's just say that, you DCA right here, you DCA right here. And let's just say that you only DCA'd once. And then your average entry kind of pushed up right here. Let's just say that it pushed up right there. You see how the market kind of comes up above your break even? What I see a lot of DCAing strategies is that if they're not confident in the position, they just put their stops at break even once price gets above. So either price is going to keep going in their favor, or it's going to stop them out at a break-even trade. And if they still feel confident about the position, they can kind of get back in once price goes in their direction. And what that does, instead of looking for a perfect entry, people just scale in and just take a loss. And we're not talking They're not scaling in with minis. They're usually scaling in with micros as it goes down. So as an example, they're starting their position off with 2 micros. And then the next DCA is 4 micros. And then the next DCA is 6 micros. That's what, a 12 micro position, which is basically 1 mini. And then depending on the size of their account, this could be 2 minis, 4 minis, 6 minis. And they're just DCAing into their position at strategic locations that will bring down their average entry. So if price does pop out, they can bring their stops up to break even +1, and hopefully the market goes in their direction without stopping them out. That's the strategy that I've seen professionals use. Me personally, I don't like trading that way. I want sniper entries because I feel that DCAing takes out the engagement of the market. I personally don't like that. I personally won't subscribe to that. I kind of want my entries to be close to being perfect, and I don't want to be in drawdown at all. I want my P&L to show green as much as possible. I don't like the red, so I don't like that strategy at all. But I'm not saying that it's wrong. It's not the right strategy for me. What I think about on the NQ. So we talked about this early in the stream. I do believe that there's 3 areas to look out for. If you're short now, unfortunately, I would keep a tight stop. I wouldn't let this thing run away from you. Right now, the market is recovering from the market has already gone down its 3 legs. That's his first leg, that's his second leg, that's his third leg. So it's already completed its 3-leg rotation. So it's highly unlikely that the bears will step up at this range. It's highly unlikely. You might get a rejection. I'm not saying that the market won't reject here. It's highly unlikely to reverse. I really think that bears will start coming into this area because we have this range right here. We might get a pullback back to like 740 to 21 EMA maybe. But we all know that this is the Nasdaq, so the Nasdaq might actually run those stops. And the range between what is this? 875, 895. This range is more likely to see a rejection, but I'm looking for the final range to be about 935, 955. This will probably be the last boss for the bulls, but it's this range where it's highly likely that we could potentially see a rejection. It's not guaranteed, it's just highly likely. So we'll see. Yeah, yeah, 815 is actually where we probably might start to see the bears come in. But the one thing about the Nasdaq is that would you short this? We have price breaking out to the upside. We have all these green candles. I wouldn't short this, me personally. We have 1, 2, 3, 4 green candles, a red candle that got bought right back up, and we got candles opening at the high. I would not short that. Me personally, I would not short that. Because there's just no bearish momentum. The bulls will probably take profits at these highs, but you already know it's going to get bought right back up. So instead of trying to sit in a stressful short that's highly likely not to work, actually a better option would be taking an aggressive long. If you have to be in this position, an aggressive long with a tight stop would probably be the better option. But like I said, I don't want to ever tell nobody how to trade their account. right, YM. Have a good night, man. That's definitely true. Damn. So how you liking the phone, K-Trader? Actually, what inspired you to yeah, no problem, Team Master. What inspired you to get the phone, actually? Shit, actually, let's look at that though. Let's look and see where the liquidity's at. Let's look and see where the liquidity's at. Because we can definitely see a rejection potentially. I mean, who knows? Yeah, okay, so it looks like people are starting to build their positions up around 825. We have positive CVD. We could potentially see a rejection, a small rejection. If you're trying to scalp this, I would just keep a tight stop. But we all seen this from the Nasdaq so many times where you'll see a rejection, it rejects enough to get you comfortable, and then it flips and stops you out. So if I would give a short in this situation a percentage level, it would be under 50%. It'll probably be closer to 35% that a short will work, and it will probably only work to probably around 750. Which I mean that is decent. I mean, I'm gonna say that 815 to about 850 is decent. Not 50, I apologize. Like 7, 60, 55. Probably back to R2. Probably back to this breaker structure at 747. But that's highly unlikely. 35% chance that will probably work. And if we look at the ES, yeah, it looks like Luke got his target hit at 714. So congratulations to Luke if he didn't get stopped out at that pullback right here. If Luke didn't get stopped out at this pullback, then he got his target hit. Shit, I'm glad you like it, man. Yeah, I stopped buying iPhones, or the new ones. I think the one I have is an iPhone 15, I think I have an iPhone 15, and it was no different from my iPhone 11. So I was like, you know what? There's really no point in buying. I really don't remember which iPhone this is actually. And that's what's, oh, this is an iPhone 14 actually. So I have an iPhone 14 Pro Max. And it's no different from my iPhone 11 Pro Max. It's just that instead of it being a thin phone, it's not that thin. That's the only difference. You said that you trade better on Project X charts. You know, I don't know if this is just me. Maybe somebody else. For whatever reason, when I trade on any of the X platforms, I kind of already see this as a game, but when I trade on TradingView, it's so gamified that I don't even see it as trading no more. I just see it as playing the game. I will say that I do enjoy the X platform in terms of I like the risk settings to where I don't have to think about my risk, because I just know that if I'm in a trade where I'm losing money, my first instincts is to try to protect my capital. But at the same time, I'm trying to not lose the trade. So I have a habit of moving my stop if I see that it's in an area where it could potentially get touched and I get stopped out of the position. And usually I'm in the right spot. Usually the market can kind of dip deeper into support, and it likes to take people out and then go in that direction. I have had situations where moving my stop was the right decision, and then the market would go and hit my target and exceed it. But in the situations where I was wrong, that's when I would blow accounts. I actually blew I was on like the last 2 days of before I got a payout, and I'm not gonna lie, that it kind of, I had to do some mental gymnastics so I don't kind of beat myself up, because I was like, dude, you followed your rules. You literally had the payout in sight, and for whatever reason you chose to get greedy at the, I mean, shit, like, dude, I was almost at the finish line and got greedy. And I was like, man, I'm about to get to this payout. Instead of taking, a $2,000 payout, maybe I can take a, $5,000 or $6,000 payout. So, I deviated from my plan and got greedy. I had the money literally sitting in front of my face. If I continued to follow my plan, the money, I would have had one more day to the payout and I would have got paid out. But I had just received 2 other payouts, so you already know how that shit go. I was just trying to, like, man, I just got these 2 other payouts, man. Now I kind of want, I just gotta, this amount of money. I want to get this, just being stupid and egotistical and stupid, allowing my greed to get to it, allowing victory to defeat me. And like I said, that's why I had to do the mental gymnastics. It's like, dude, just relax, bro. Just relax. I mean, anyway. So I had the money. I mean, I was like, nah, I want double that. I want double that. The market probably went $200 extra in my favor, and then it drops. And then you already know once the market goes against you and you had the money already locked in, or you could have locked it in, you're not going to accept anything less than what you saw before. Or at least that's what I did in that situation. And I DCA'd into it, and I had a big balance in the account, and I lost it all that day because I was like, well, I'm gonna be stubborn. It's gonna at least come back, dude. And of course, it was a day that the market just decided to just continue to go in that one direction. I lost the account, lost the payout. And if I just had my risk settings set up, that wouldn't have happened. Because in the risk settings on the Project X, it would have automatically locked me out at my maximum daily profit. It would have automatically locked me out at my maximum daily loss. But this was before they had the lock feature, I think, because I didn't lock it, so I went back in and changed it, or at least I didn't lock it. Let me just say that, because I don't remember. I'm not sure if the lock feature was there yet or not. I'm not sure. So I'm just going to play it safe and say that I didn't set it. I didn't set it to lock. And I went back in and I changed it. because I set it to liquidate at a certain point, but not to lock it out. And I went back in and changed it, and unfortunately, I paid for that. And a guaranteed payout was, all I could do is imagine Top Step was like, whew, well, at least we don't have to pay this guy out. I know they're not doing it, but because it wasn't like it was a 10K payout, nothing, wasn't a big payout, but you know, it was going to be a payout. So yeah. But with those risk settings and locking myself out, I don't have to have that internal battle with myself when greed takes a seat at the table and says, yeah, I see that you're trying to be modest. You're only looking for $700 a day. You know, that's that baby money. You can make 14. I mean, how often do you get out at $700 in profit and then the market just continues to go in your direction? And then you got to sit there and watch it. Don't you want to be a part of that? And of course, I'm going to say, yeah. It's like, yeah, I mean, you got great entries, great exits. You can make a little more, man. You're leaving money on the table. And, you know, I allowed that internal conversation to win. And unfortunately, I lost that account. So, lost that account. Yeah. So if I get another X account, actually I do have one more X account. Actually, I have two more X accounts. So I have one that I just allow to rebuild because I pay for the level 2 data through Top Step. This is the level 2 data right here. So this is one of those $4 accounts that they offered like 3 or 4 years ago. I'm probably one of the few people that still have that account. I wouldn't be surprised if I'm the only person that still have those $4 accounts. And Top Step is probably looking at us like, damn, we still got people still with them $4 accounts. I just let it rebuild because I like the level 2 data on Top Step X. I don't necessarily like it on Ninja Trader 8, so I just allow it to rebuild. I do have one more that I have not traded. I haven't placed a trade in that account at all. I don't want to, actually. Kind of want to keep that account. And I'll just let it rebuild. Oh, you still got yours, John? Shit. You're just keeping it just in case? You said you canceled yours as self-punishment? You know, I did that too. Well, shit. What are the odds? Here, I thought I was one of the few people that still had those $4 accounts, and shit, here's somebody in the stream says they got them too. You know, when it comes to trading, the one thing that at least that I did was I did the whole punishment thing. Man, shit, the body. I done that, and it doesn't work. It doesn't work. At least for me, it doesn't work. Because I know that when I'm in a certain situation, I'm going to do certain things. If I lose a position in the market, it goes like maybe 2 or 3 points, I can accept the 3. I mean, okay, I was wrong, obviously. But if the market stops me out at like a tick or something like that, man, that is definitely going to set me off. It's a trigger. It's triggering. And that's why I always say that Cave Trader is such a great loser, because this is the trade that he was in. He shared with the stream. I mean, shit, gold literally stopped this man out at the tick. Like, this is the most disrespectful thing that the market could do to a person right here. Literally stop this man out at a tick and then goes in his direction. And this man did not revenge trade or nothing. He just said, well, you know what? It's a loss. You know, I'll come back in. I know that there's always going to be another opportunity to make this money back. I'm going to accept it. Me, on the other hand, man, I would have went to minis and I would have full ported that shit. I would have got my revenge. Actually, I think I did that last week. Gold stopped me out and we got back in and I almost, now the crazy thing is I would have worked. It would have worked, but it would definitely been a revenge trade. I mean, I would have been revenge trading, obviously. So that's Friday, Thursday. It was on Wednesday. It would have freaking worked. Yeah, this move right here. Gold had the audacity to stop me out and then do this shit. And I almost did exactly this. So where my entry is, when the market was going up, I almost full ported in my funded account. I had to literally lock myself out of my funded account because my trigger really, it was an internal battle fighting myself not to full port in minis in my funded account because it stopped me out and then it hit my target. I don't know why it did it though. I mean, like gold just kept dropping. I was like, why is it doing that? Why the heck was it doing that? And after it stops me out and then it does this crap. And that's my biggest concern on gold, because you don't know if gold is serious. Like after that, because I mean, usually a trade like this, it usually works. And if it doesn't work, then it's going to the next area of support, which could have been down here. Now, where this range is, I don't know if y'all guys can see it. This potentially would have been where this is actually where the market actually went to. The market actually tapped into this area of support right here. You don't know if it's going to come back down to this area of support right here. So it's like, well, is gold being serious here? Is it just sweeping this low? And is it going to pop back up? Or is it going to continue to go lower? Because what gold likes to do is kind of fake out and then drop. So if it doesn't react at the first area of support, it'll come to the second, and then you can get your money back. And I wasn't sure. And I believe this happened at 9 o'clock at night. So I was like, I don't want to be up all night, because I would have been up all night with this trade if it didn't immediately work out. And then once I saw that it hit my target, I almost got into my funded account. Full port, I had to lock it out. But it would have worked. It would have worked. But this was probably one of those 1 out of 10 opportunities where, if I long the top of the move, it probably would have rejected and then it would have kept on going. I mean, it pissed me off, man. It woke me. I was like, I woke up at 3 o'clock pissed, and I was going to go back into the market and try to get my money back. But I locked the account out for the entire day using the cold turkey software. Gold pissing me off. Yeah, that's right. Yeah, you say you suck at losing. Yeah. Yeah. Shit. Gold can definitely be the devil. Like, she definitely can be, man. But there is a blueprint. Honestly, if I take the same trade 10 times, I will probably lose 1.5 out of 10. Literally 1.5, because usually gold only does that little move it did on Thursday right here, where it kind of continues to go down and then push back up. She does this like maybe every once in a while, because usually she would have popped back up, then did this, then did that. So the price action would have looked something like this, because you saw this is where, so where you see this consolidation at, this is where I got in at. So a lot of people were getting long at this area because they were looking for the break, or they were looking for the pullback from that break of structure right there. So this range right here was everybody getting in. And obviously a lot of people got stopped out of this move, me included. And then it kind of does this, but what gold usually does is it breaks structure. You see a pullback, you see price go up, and then you see the two-legged pullback into support, and then you see the move higher, because obviously everybody's running those the stops right there. But we didn't get that. We got this stuff, and she does this like every once in a while. So I was definitely dealing with a lot. I did not want to stay up all night with gold. It was at 10 o'clock. I would have stayed up until 3 o'clock if that's what it took. I would have stayed up all night if that's what it took, because I'm not going to sleep when I have a position running in my funded account. I need to be able to manage that. And I just didn't want that to happen, because I knew that's exactly what I would have done. And yeah, so yeah, gold is definitely the devil at times. It really is. Yeah, that's definitely true. YM, that's definitely true. That is definitely true. We are risk managers before anything else, or at least that's how it should be. We got to manage our risk, and we take those risks. And sometimes it doesn't play out. Sometimes it does. And then we have to manage our emotions. Which I will admit that it's definitely difficult at times, especially because you have to be okay with the market stealing from you. It's hard not to see it any other way. We can call it losses, we can call it learning experience, we can call it anything that we want to call it to make ourselves feel better about it, but that is a natural feeling that when we get stuff taken away from us, we want it back. We want it back. It's a primal instinct. Good thing we're not lobsters. I always say good thing we're not lobsters, because over time, lobsters become bitches after a while. They take too many L's, they become docile, supposedly. And the ones that keep on winning, they get more confident. The ones that keep on losing, they're like, well, shit, you know, I guess this is what I'm supposed to be, a loser. And they accept it full-heartedly. There's something else about lobsters that I thought was very interesting, is that they could potentially be immortal. Potentially. So just imagine if you're in a mortal lobster and all you did was took L's all your life, and you got to spend the rest of your eternity as a loser lobster. Like, that's a horrible combination. You're potentially immortal, and you can't take too many L's because your ego can't handle it. That's crazy. That's a crazy combination. A crazy combination. But I guess the reason why they say that, I guess if lobsters keep molting, I mean, there's really no reason why they die. If they don't get eaten and they keep molting, I guess there's really no reason for them to die. Now, we don't know this unless they have a lobster and they're making this claim off of observations. But if it's true, that's a dangerous combination. So. Yeah, it's definitely true. It's your system, man. It's definitely your system that gets you paid and keeps you paid. That's why this week, especially in these accounts, we're going to take the orb, regardless of how I feel about it. We're going to take the orb and we're going to document it. We're going to try our best. That's all we can do as risk managers. All I got to do is try our best. We look for the same thing every day, and we should win more than we lose, especially if it's a winning strategy. So the orb is definitely a winning strategy. Sometimes it doesn't feel like it's right, but the Nasdaq has definitely shown me that the orb is the orb. I didn't think that this trade right here was going to work, and it super worked. Or what day was that? Thursday? So I wasn't trading. Actually, I was trading Thursday. I traded Thursday morning. I didn't trade Thursday night and Friday morning. And this trade worked. It worked out. And I didn't think it would, but it did. So. But all right, guys. That's it for me tonight. The ES, yeah, I definitely agree with that. Okay, trader. Well, I agree until the ES gets choppy, and then the orb on the ES is horrible. Trading the range, the ES range is, in my opinion, the better option when the market is not trending on the ES. But when it's trending, the ES orb is the superior option. When the market is trending, the ES orb is superior. The ES orb is superior. On these choppy days, the ES orb is horrible. And it's better just to trade like, what is this, Thursday? Yeah, Thursday and Friday of last week, trading the ES range or the orb range would have been the better option than trading the actual orb breakout. Yeah, no problem, everybody. No problem. Yeah, we will definitely. Yeah, I definitely agree with that, K Trader. Definitely agree. Because I mean, this is the mission of the stream, man. No more of these fools selling $10,000 trend line courses just because they're good marketers and they're trading with titties. We're no longer going to pay $10,000 for courses about trend lines or all the other silly strategies that is free on the internet, but you know, people are charging premium for trading. I mean, we made 20. I mean, it took us 30 days. It took us 30 days with 4 MNQ contracts. We made $20,000. It took us 30 days to get there. And we took the same trade. We traded consistently. I think I only had about 3 or 4 losing days, I believe. And we got that money back. Got it back. There were times where I took big losing trades into them because I deviated from my strategy. This was in the first 15 days of trading this account before I just accepted that trading with 4 micro contracts, the way that we trade is, and looking for the orb, was the consistent strategy that we should look for every day. And those days where I almost lost the account just really opened my eyes to say, well, this is what happens when you deviate and you do things that has been proven not to work. When you over leverage and doing things you know you're not supposed to. It was just I was at the mercy of the Nasdaq. I really was. If the Nasdaq didn't come back with some of those trades earlier on, I would have lost the account in the first 15 days. But she was merciful to me. She took those opportunities and I turned them into learning experience or learning opportunities, and we was able to make 20K in 30 days in a month, with only trading 4 micro contracts. So we can definitely do it. It definitely can be done, and we're gonna do it again. So But all right, guys. I appreciate everybody that's joined me tonight. We'll definitely come back tomorrow morning, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody. Have a good night.